Um, we're gonna backtest some trades of last week, basically break down what went well, what went bad, what we learned, um, the A plus setups, so that we can get even better last week. One thing I did notice, I really dopamine detoxed last week. I don't know, maybe it's for me, but I had no urge to like hop to other like sites or scroll socials. I removed all of that, and I think my focus ability on the trading and the urge to not do stupid trades improved a lot. So I definitely recommend that. And I felt the results of it. And on Friday, I ate like, some sugar. Um, yeah, I was just like I had some drinks Thursday night with some mates late night. And all of a sudden, Friday, I took a bit of undisciplined trade. Um, Felt way more obliged to scroll social, so I think definitely work on that. But yeah, so next week, gonna keep going with a dopamine detox. But let's get rolling. Right, so this was the open of last week. Um, First off, bias going in was, I mean, we're in a consolidation phase. So we can only anticipate further consolidation and manipulation in different ways until we sweep this high. It is above this high where we have all of the liquidity. That goes for next week as well. People go short there, people go short there, break down below, right? All liquidity that's being engineered is basically people going short. So I mean, this build up here just makes me even more confident that we are indeed gonna be bearish, but we'll have to see. We'll have to wait for the confirmation. This was the pattern. We got a breakdown up, now below. I feel like next week we um, either down here or up there. I mean, I hate people saying that, but what we'll have to wait for is a break of a bank block, which I went through in the bias video of the week. That will help us determine where we're going. Um, could be bearish up. All right, let's get to the backtesting of the setups. So we start the week off from this order block there. Am I right here? No. Oh, my bad. I gotta find the next. Here we are. So that's the open. Right. So we open up. Um, Let me drop down. First London. What happens? So this is our first London. Opens right there. Initially, we we break. So like this is our first setup of the week. Really, this is on the Asian. So I'm asleep. But those of you aren't, this was a bank block. Should have held. Doesn't right there tells us okay, we are drawing towards lower liquidity once we get a break of this bank block. So what we do then is we drop down and we look for some pattern inducement. Do we get it? That's the first one. Break up below. Stops above there. Doesn't get the sweep. Um, yeah, so we didn't get it here. So not A plus to be honest, but we had the bias, and then you can always look for setups. What you could have sought here is we get this. This is a lower time frame pattern inducement. Breakdown below, people put their stops where? Right there. Sweep, where's new bank block validated? Right there. Do we get a move back inside of that? Yes. And additionally, I like with this, we leave this double bottom. So basically from that, you would go into, I'll just show the 15-second, and that's where you want to look for the A plusers, the A plus setups. Almost there, really. Well, basically, that's where you would have gone short. So that's first, you would have had a bias towards at least this one. Standard deviation here is not very clear, but I would say we would probably start off with this one, see, and then trace that one, because we don't really get a 15-minute one here. Possibly we get is this one. So that's interesting. Yeah. So once you get up, the break of order block can act as the standard deviation move. Good observation. Right. Next. Now onto what I think is a bit of a better setup. Didn't take any trades this week until Wednesday because I was working some extra gigs at another um, day job, and so basically I'm doing this turning $0 into a football club challenge. So I'm generating the startup capital. But what we did get here, this is what I like. Okay, so what is this? If we drop up into the 15-minute here, this right here, break below, sweep the high. This move there is a bank block. This should hold if we are to draw towards this low. We break this high ahead of what? Ba, ba, ba. Yep, New York Open, you called it. So once we get this break here, that tells us, okay, our bias is bullish. Let's look for some pattern inducement and let's try to find a long. And so what do we get? We get this. And so in this whole move, a lot of liquidity is engineered bullishly and also bearishly, arguably. I mean, here, break below, boom, sweep that. But this is the main manipulation, I would say, up there and even there. But overall, what you want to look for once you see this kind of pattern form is where do we get the bigger breakdown, which is very obviously down there, right? So once you get this, that is people going short. Retail think, okay, we are short again. Um, and you always want retail to be offside. That's my observation. You get that. We got this 1 minute order block right there. Right? So where is the liquidity in this move? Is in this double bottom, double bottom, double bottom, double bottom, double bottom, double bottom. Right? Is below this. Even if you look at it from a pattern POV, let's look at it from the 5 minute. Is even more clear that a lot of the main liquidity is there because of that low. So we need to sweep that before we can move because that's where liquidity is. So we anticipate this sweep. Boom. We put our alarm there. I'm going to remove it. That's where alarm. And then you look for 1 minute bank block to form from there or even lower. But in this case, we did get a 1 minute one. Where? Right there. Why? See how we go up, sweep that little high there? that gives us a low, high, lower low, break of the high. So that right there, bank block. So that's where we would have had our entry. Stop below there. Target, where to? Standard deviation of the move, because that's where the retail went long. I believe we would have looked at it. I mean, this one is not optimal for the standard deviation, I would say, because it's not very clear where in this move the banks are buying. I mean, to a degree, it's like everywhere in that move. I think this was the real, or that was like standard deviation. Yet again, that's interesting. Um, it's very interesting. I'm gonna make that a handout as well. But yeah, uh, the setup is get the break of order block, understand the bias, look for the pattern inducement, look for the 1 minute bank block, or even lower. Right. Let's continue. Did we get any other setups here? No, not really as beautiful as here. Right. Tuesday comes around. It's 2 a.m. You can immediately see here. Where's our bank block here? Because it does move like a flag here. That's super beautiful. I didn't take this for a reason, but we get the pattern again with a inducement bearish, sweep that liquidity, look for this liquidity. But for me, the bias is not quite clear enough here. So I would not have taken this because I would have wanted uh, like a higher time frame bearish break of an order block. And we didn't get that before this move form. So it makes it less clear. Like here, we get the break of an order block before. And so then we know, okay, we are bearish. But still, let's study. So we get the sweep right there. We have I think this one probably is on the second. 15 second, I look a lot at that one. Stop would have been below there. TP1. Yeah, I mean, this is now it looks very hindsight, but that is the next logical one because this one there, bank block, uh, liquidity inside of a bank block tends to be a good draw. If we would have broken this low there, I would say that's when okay, because then we anticipate we're gonna break this one, and then which is another bank block. Well, it would depend how much liquidity we build below this one, though. But yeah, uh, so we get this is not an A plus for me because we don't have a high time frame break of a bank block, but still study this pattern. Pattern inducement people have their stops where. A lot of them have it up there, but even there. I mean, I would probably, do we get a, because this could have been one we were manipulated out of, but we don't get a break of a bearish bank block in this down move here. So we wouldn't have taken our entry there. Whilst here, the move like before takes out low with it. All right, next. 8:30. Boom. Solid manipulation. Right. So we get the 8:30. I'll probably not trade that. What do we get then? 9:30. There. Okay. So right here. This is a very clear break of an order block. Like I always start at 15 minute. Here's the 5 here. Right, so we break this low. We did not need to do that, meaning our next draw is going to be below this one. But that would be another break of an order block, telling us our draw would likely be below there. But that's another break of an order block, making our draw all the way down there. Same principle could apply, but I would look a lot at that one. Say, okay, we might, because it's, why? Because it's so much liquidity built up below that one. So that would be my draw for that one. Basically, breakable. We have that multiple times here. So once we get that one, that sets us up for a good setup. First thing I would look at is what's going on here. That one there looks a lot like a internal order block, right? We break this low. Where do a lot of people put their stops? Above those equal highs. And then basically, I mean, it's a second. We gotta look at it seconds here. But this one here looks a lot. I think I had. Let's drop down in 15-second here. 13th should be here. There we are. Yeah, so here you can see a bit more clearly why this one there is a order block. Like you see how we break low, engineer a lot of liquidity up there, sweep that, boom. So that's where I would look for a setup. Where is liquidity within that order block? Up there. All right, do we get any pattern inducement though? Not as beautifully. I mean, we do with this trend line sweep, which still is very much a thing, even here. So I would check that off. What we would then need is a sorry, bank block validation on the lower time frame. So we look for next one we can find. Now, what would an A plus setup look like here? For me, it would basically be break, go up, sweep high, um, validate the break. That would be very high probability setup. Does that make sense? So break of lower time frame pattern, go up, sweep that high, break the new low. Very, very high probability. Very low risk. And then we would just hold it all the way down there. Now it seems, where do we get our setup in the end? We get it here. That's a lower time frame. Like this is exactly what I was talking about. So pattern, break below. Where do people put their stops? Up there, right? Double top, break, boom, high. Uh, Even this becomes on the 5 second, but let's just look at it there. So, and then you would take your entry there, stop above there. Not quite an A plus because I think the risk reward is slightly too low. Not the best, but can't catch them all. These entries I find really, really sexy. Uh, like this is where the pros enter. They understand order flow so good. They understand bias so good. They basically see, okay, we have this bearish order block. We have liquidity within. We know the bias is bearish because of this break. Um, I'm gonna enter right there. Stop just above this high because there is no reason. Why would the banks want to take out their own stops? Doesn't make any sense, does it? So that's what I tend to be looking at, like the lower time frame from that, just for the extra piece of confirmation. That's what I'm comfortable with at the very moment. Right, next. Wednesday. This was my first trading day this week. Let's look at the London initially. Now we are talking, baby. So what do we get? Initially, I thought this was pretty beautiful piece of draw. Um, didn't get that. Instead, we got this break of a bank block. This is when you know, okay, we are bearish, boys. Once you get that. Because why? Because this is a bullish. This was a bullish bank block. No reason for it to be broken, but it was broken. That tells us, okay, we're bearish. So then we anticipate this as resistance. Um, Bias becomes like, yeah, you can say below there, but I would not. I would say lower here. Because why? Good question. Well, if, if we look at the higher time frame, drop to the hourly, where are we? Right here. Right. This low is no need for it to be broken if we are indeed, if we are bullish, because this low has already swept the liquidity that we wanted to sweep there. And so why would, if we were long, why would the banks want to take out their own long positions? Because they entered there, right? Doesn't make any sense. So with us getting this break, allowing us to anticipate, okay, we're gonna take out this low, which likely means we're gonna take out this low, which likely means we're gonna take out this low because that's the next major piece of liquidity that we had there. So basically, from that tiny break, you can say, okay, we are likely to go down far. Let's drop down in time frame. Also, we would work with our sexy standard deviation, but that's for later. Right. So what happens then? Break of order block leaves this double bottom. Like, come on, you can't make it so beautiful. Fucking hell. Pissed I missed this. But then what? Okay, where's liquidity inside of this? There. It was. Um, this wasn't the most beautiful, but uh, that's the liquidity inside of that. This is higher probability entry, a bigger risk. Definitely bigger risk. We had this trend line here. I think this is probably the A plus one. Looking at it, um, entry right there. This is a lower time frame order block being formed. Like, look, this is a second pattern right there. Break below, go up, sweep the pattern high, induce the higher time frame trend line as we do. Or do we? Yeah. So pattern, break below. Okay, we're going, people go, breakout traders go short. That leaves their stops above there. Go up, take their stops. Move down, validate the bank block. A fucking plus. After we know the bias, very likely. After we swept liquidity here inside. And it's a big ass risk reward. Like, that's exactly what you want to look for. Break of order block, higher time frame. Okay, we know our bias. Liquidity inside, sweep it, get a 1 minute order block with a very, very good risk reward, and just go. Uh, that's exactly what I'm looking for. I love these. Like these. It's a pattern. You get break, sweep above, go below, validate this one. Boom. Order block validation. Because it basically it fakes out everyone. A lot of people are faked out. Beautiful, beautiful, beautiful. Right. How far do we go? Higher time frame, standard deviation. Now, initially, I would probably have looked at it. That's where I would have drawn mine out, but it wasn't the one we were drawing out. It was actually this one, um, all the way down there. Because yeah, so this is basically London setup, London standard deviation. That's what you look for. So that's the end draw for the London session. Now, what happens then? We get another A plus setup. Like, come on, you can't give us two, right? It did. This is my first trade of this week. And I took it with 3 micros, and it made me roughly the 600 bucks. Could log into my top step, but I'll do it later. So, what is this? What is happening? Right. So this move on the London went down, broke this low there. That's where they have their stops. So that's where the banks went long. So to confirm our bias that they want to push it even further low, we need to take out this low. Now, what does the New York session open with? What happens? Break below that order block. That tells us, okay, they are not done on the downside. They wouldn't take out their own stops. Doesn't make any sense. So right there, that's inducement. Now, where's the liquidity? Where are they inducing the liquidity? I would say all the way there. It took it even there. But that's where like all the liquidity is, right? Um, so that's where the shads enter, right there. Didn't get a 15-second order block set up there, so I didn't take it all the way up there. Where did I take my entry? So this is Wednesday 14th. Here we go. Wednesday the 14th. Here we go. Right here. What do we get? Right. Pattern. Break below. Stops above. Validates this. It's a lower time frame. Bank block. That right there is my entry, folks. First trade on the funded. Now, how long do I hold this for? Well, I believe I let go one contract below that low. So 1 micro, just a tiny trade. The second, I drew out. Basically, the standard deviation is extending the move that the banks bought in. Now, it is all this move here. That's the manipulation move. That's where they bought. So that was my final target. I let go of the second one, right, or the third one, right down there. Like, that is ridiculous. You can't make that up. Look at that precision. And look what happens just before. Pattern, right? Always the manipulation inducement, blah, 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 blah. Onwards. I believe I let go of my second entry, or my second micro below these lows. Now, what I could have done better is, could I have full ported there? Could I get even better at looking at these? Like, that's a hell of a trade, isn't it? Taking it up there. I want to take those entries because these entries are so good. So how can we do that? I think it's always the same. Find the break of an order block. Find the lick inside. Find on a higher, on a M15 plus time frame. Find lick inside of that. It should be very obvious. Take your entry above that lick. Stop loss. Above the new bank block high / low. Where is that in this instance? It's there, right? Break below, high, low. This entire move comes to bank block. Oh, let me see. I mean, yes, that was an extension, but it's also this one. That was also our bank block in it. Look at that initial rate. So yeah, I probably got the standard deviation one wrong. It seems to be break of an order block that is the correct standard deviation. I'll write that down because we've seen it multiple times now. I mean, it seems quite clear. But yeah, all right. So that was that setup of that day. Very very nice. Another setup was down here. I took this one on a demo because I was like, nah, I'm up good amount today. I'm not gonna risk nothing. So we get this pattern inducement here. So this is like the first one, I guess. Could have taken. I mean, you have this triple bottom below this one. You get a pattern just before. Manipulation high, sweep the low, entry. Stop below there. But what you end up happening is you get all of this consolidation mid-move. Now that is not something you want. In general, you want the move to be fast. But what you would have done is, okay, you get this move here, uh, boom high, okay, move your stop below there. So would have been a tiny win. But then you get it again. 1 minute bank block, right there. And by the way, I tend to look at the 15-second ones. But yeah, you get the pattern, induce again, high, 1 minute order block, entry. Personally, I tend to like it more when it's even more like liquidity below a specific like PDA. Like here, it's not like for example here is one low, two low, three low, fake up high. It's very clearly being induced below this one. Here it's just boom. So, but still, it's the pattern, right? Around the 15 minute. This is the pattern. Induce the pattern. 1 minute order block from it. Entry off of the 1 minute order block. You get this. You get it validated. And you hold it until your standard deviation, which was the break of an order block. Now, which one here is our break of an order block? Yeah, it's this one. Because we get that low, go up, sweep that liquidity. All right. You missed the first entry. You now know the bias because of the break. What do you get? Get this thing as your like fugly pattern, where you can just say it's very clearly engineering liquidity above. Like that's the most important thing. It doesn't always have to be a clean pattern, but it's very clearly engineering liquidity. Like low, 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 fake out up, break higher, break higher, right? It's very clearly, if you think where do people have liquidity, that's what you want to ask. Do they have it here? Yes, little, but mainly there. Go down, sweep that liquidity, look for a 1 minute bank block from here. Don't really get it. Or I mean, you get it there. So that would have been entry, but let's look on the 15-second, 14th still. So it's this one here, it seems. Right? Break below, sweep high. That's where people go long, right? On that break above there. So, and you can very clearly see that's the one that's being referred to. I don't know, did we use this one? Yeah, that's interesting. Like I think you need to be trading with or it helps a lot. The 15-second you can get a lot better risk reward entries. You can also probably, this is probably like a 5-second entry right there. I don't know, but let's use that one. Not exceptional risk reward on this one. Like he's always just better. Could have used this one as your entry as well. Order block, liquidity just above. So you have your stop below this order block. I would presume this move here would be standard deviation. No. Okay. That's that day. Let's move on to the next. Oh, yeah, next London. 15 minutes. Something interesting definitely happened there. It's kind of is there. That's the London Open. So what do we have here? So pattern inducement, probably on the lower time frame. We have something like, I mean, break below high. Let's drop down to 1 minute. I mean, we're blind. So I don't like this pattern before. Like this breakout, yeah, it's a trendline breakout. It's height. People definitely go short here. Stops above there. And up there. But then what happens is we get this extra low. Do I have a meeting? No. Okay. So double bottom and you need liquidity below there. Lower time frame, bank block, entry there, stop below there. This, do we have a 15-second bank block or 15-minute break? How do we know the bias here? Because so nothing super clear here, I wouldn't say, in terms of bias. So probably nothing I would have taken one could say this is probably a bank block. Like if we would have been bearish, we would have wanted to move down after sweeping this high, but which is partly right, partly it's a bit tricky. This one, I would see it as like we get this break, stops above there, break, stops above there. Ah shit, my brain's getting a bit slow. It's probably the main thing also is we would have been looking like that's another thing. Or if we were bearish, order flow should have been reversing after this high because that's enough liquidity post inducement, but we don't. That kind of tells the bias. I wasn't on here to be honest. This is just backtesting, but that is something that I would say, okay, that makes my bias a bit more bearish here. But let's say we missed that, but that would have been the entry. Okay, if our bias was bullish here, because we break that one, it's also like up here for me, that's another break of order block because you have this low break, high, like people go short, have their stops above there, sweep those, and we validate that as a bearish one. So if we are bearish and we've swept all this liquidity and we want to react from this bearish order block, then we should not break that high, but we do. So if we would have been uncertain about the bias down here, well, then once we broke that high, yeah, you could be confident we are going higher. So let's look at it from that now, because that's more fair, I think. To get that break, okay, we are bullish, boys. What do we look for then? A pattern on the lower time frame. That one's pretty clean. It's a pretty clean one in 1 minute. This one, I'm trying to think. That's probably decent reward. Like now here, we get the inducement. That's like a very tiny setup. Because we don't really have the cleanest liquidity sweep. I mean, we do have these equal lows. So that's very much a 15-second setup here, probably. Let's drop down. It's London Open Thursday. So when do we get this? We get a break of a bank block right there, right? No need for this one to break if we were bearish, but it does come down. Where's liquidity? Uh, Honestly, that would have been more ideal, but price is always going to be imperfect. Uh, but what we do get is inducement to get a lick sweep as we induce, and we do get a lower time frame or block post induce. Where can you see it? Can you see it? Can you see it? There. So our entry here would have been there. Stop there. Now this is something, a tiny detail I like to say as well. See this trend line here? You have this trend line, you get a break above, and you then get all this liquidity swept. That is also very clean price action with like people go long here and to even further build up their positions, we want to take out their stops. And where are their stops going to be? Below there. So that, and then we get, you see this again, see the tiny break of a wick there? That tells us it's basically a lower time frame or block as well. So that could have been another entry for us, putting our stop below there. Now that, I don't know what happened there, but whoa. Yeah, so here we go. So multiple setups there in this one here. And I mean, if we would have understood the bias here was bullish, then there is some candy to be collected here as well. Pattern. This one is interesting. Pattern. Break below. Stops above there. Sweep stops. This one could have been validated as a bearish block. Especially, well, not really, because it doesn't really sweep the real liquidity. You get this break below this one. That liquidity is up there, or it's got to engineer some. That tiny sweep there wouldn't really qualify for me. Besides, I mean, and yeah, it would have been valid, but our bias was bearish. It always comes down to our bias was bullish. Sorry, it always comes down to understanding what the bias is, because you can find order blocks everywhere, pretty much. But if you don't understand the bias, then nothing else matters. That's why you can be successful with any strategy, as long as you're very good at bias and money management. Right, next. Let's study standard. Okay, let's study the standard deviation. So it should be for the London session, our target should have been around there, which yeah, it was. Right. Yeah, interesting. Went even above there. Or was this? Yeah, it's a new one. All right, let's look at our next one. which is the New York Open on Thursday. I think also here probably this price action here seems very, very interesting. Um, let's find. So first off, we get the breakout or block here. Now, if we were bearish, wanted to draw further like below this low, we would have respected this or block. That tells us, okay, we are drawing towards higher liquidity. This is very, very obvious liquidity. Um, even here as well. Like I think it's like a chain reaction. Sometimes, like if you can understand, okay, there's no reason for us to break this high, but so now we're bullish towards this high. There was no reason for us to break this high, so we're bullish towards this high. No reason, like, and then all the way to this, because that's some juicy liquidity. So already from this break, you can kind of have your setup all the way towards there, which is very interesting. Um, but right, what happens here? First thing caught my eye, break of this one. Looks like he has least. I don't know. Is it though? Is it though? No, not really. Or yeah, kind of is. No, not really. I mean, the thing is here, we just have a bullish bias. And so literally every single piece of bullish price action, we anticipate to act as support until proven otherwise. Here, I would say, okay, we have a bullish bias. We have this order block. We have this inducement up, telling us, okay, we want to build up a long setup again because we get the inducement bullishly, meaning people go long, leaving stops. Where do we have stops in this move? Here we have below this double bottom by the looks of it. Let's check the 1 minute. Yeah, so very clear double bottom there. From there, do we get a 1 minute order block? Yes, right there, or bank block. Apologies. So that would have been, I mean, that would have been the shad entry. I would have looked for also a 15-second, but so you either enter there, that's the high risk. You enter there, or you would have waited for a break there. Okay, like that's a lower time frame break on order block because break there, boom, right? So that's a move where banks went shorts. They won't want to take out their own stops. Mm. Yeah, so we do get an entry here. Yeah, so 15-second order block from the 1 minute order block. That's our lower risk entry. That's our shad entry. I mean, what I kind of want to like here. I want to look at like the 5 second and just find it there. Because I swear, it's more like where the draw is there, where the liquidity is there. I hope I yeah it does. Brilliant. Because like so basically the logic with why you can use the 5 second ones is this is where you anticipate the reversal. And so what can happen is price can move, it can go all the way down there, right? You might want to go lower and sweep even lower, but it can't break this low. And so high risk entry would look like this then. Still decent risk reward, but this slight move here, to me, it gives even more. Because basically, if you look at it, you get this low here, and then you get this big move up, breaking this high. Now, on the micro scale, that induces liquidity. So up there becomes a 5 second bank block. And then basically then once after you've sweat this liquidity, and only then you can use this as your entry. Because you've now swept the liquidity, you have your higher time frame bias, you even have your lower time frame confirmation, and you would put your stop there. But it only works if you're very confident about the bias, and it's the move starts just after or after you sweep the liquidity you anticipate. But don't take this for granted. Backtest this. I'm still developing that how low a time frame you can go down to. I've taken a couple of 5 second ones. I feel they tend to work. But yeah. Okay, next New York Open. I think this was a bit of a trickier one. Did we have a so that one is I've made it to 10. This one there, sweep or high. No. I mean, before open, I would probably look for this liquidity here to be swept because it's a lot more easier, and we've already swept the high. So that's what I would go into, and then I would look for a break on order block to justify that. And we get that break on order block right there. Why? Yeah, this one I took actually. So you have this trend line, boom, break all that liquidity after we have, like, this is on the lower time frame. This is a pattern. So people go long, sweep all that liquidity, validate the high, right? And then all of a sudden, we break that low. Okay, we had no reason to break that low if we were to continue bullishly. So now our bias becomes bearish towards what draw? Well, this one. But then it's, oh no, it's Tuesday. Fucking hell, that's why I remember it. Right. Sorry. Right, so this is all we get this move here after we have swept this high. What will we look for then? Well, again, we will want to look for a break of a order block, which comes there. after we sweep this low, we anticipate a move down towards this low because um, well, this is not super clean, I wouldn't say, but one could also argue, okay, we have this though. Boom, like we've already swept the liquidity up there, and then we go up again. We validate this high, and like we had no. So we have this, people go long, go down, sweep that liquidity. Yeah, but, but yeah, nobody, the banks didn't really go short up there. So that's not a valid bank block. Um, but this one is though, because they very clearly went long there. We have this validated, and so, and yet we break that low. And now it's like, okay, what do you mean? So from here, 950, we anticipate, okay, we're gonna find a bearish setup here. Now, what you want to ask then is where is the liquidity? So break that here. Okay, where's the liquidity? There in it. Especially when you go ahead and get this second double high. So we would have gone ahead, put our alarm there, and wait for that sweep. And it just keeps very clearly building up. We know our draw is towards this low. Um, I mean, I would have probably said, I would have anticipated a move all the way down there, to be honest. But don't always get what you want. So now, this is the liquidity we anticipate. Let's see if we get a 5 signal from there. Oh, that's a lot. Nice. All right. So, yes, there. Stop above there. Boom, go down. Get swept. Fuck. Comes down, up, sweeps our stop. That would have been a L on the 15th second. No, on the 5. L on the 5 second. Hmm. That one's a lot cleaner. I mean, the entry. So yeah, let's see how good, how much we can trust that. I mean, it does go initially. This 5 second bank block here, it is initially respected. Goes up, sweep the liquidity inside of it, but then it goes up again. Um, and that's probably initially respected. Goes and sweeps it again. We would have moved until initial. Right. So could we see a loss of the strategy as well? We are aware we can lose, of course. Um, It's tricky. It's initially held, at least. Uh, and that's kind of the law. Like if it's gotta hold once and then sweep another liquidity. In this instance, it wanted to induce yet again. That's why it kind of can be good. Hmm, tricky. Yeah, I think we just gotta be chill like that. We are aware the S5 can fail after initially respected. We must be ready with our stopping. It can want to induce again. There is no shame in that. So here we get probably looks like a 1 minute. Yeah, so then okay, 1 minute validated. Let's go look for a 15-second. Because they are sexy. Price is imperfect, which is annoying. I guess that's where you get the inducement. Sweep lick as induce, not external though. Valid. I mean, the thing is, when you know the bias and you get these low risk order blocks, they're just not gonna be very clean always, but it kind of is the way it is, you know. That's our initial entry. I'll probably say this one. Because and the risk rewards of them is very good. All right, you know what? I think I've done a lot. I'm gonna take a break. Maybe I finish tonight. Thank you for stopping by, and I hope you have a good rest of your day.